Hey guys, it's me again, Photographer here. Today, first, we're gonna dive into our weekly recap using Coinalyze, which if you follow me for a while, you know is one of my most trusted, simple, and reliable sources. Last week gave us some intense volatility, and while the surface level price action looked scary, the underlying data was telling a complete different story. We're going to break down why the recent dump might actually be the fuel for the next pump. Alright, let's look at the Bitcoin data. At the initial price drop, we saw the sharp corrective flush that shook the market, but here's the standout signal. Look at the accumulation trend in spot CBD. While the weak hands and leveraged traders were being flushed out, spot buying pressure was actually building back up. Now, full disclosure, those signs from last week were signaling a major surge for this week, but Bitcoin actually started its move up before I could even get this video out to you. As we speak, open interest is increasing sharply, which means fresh capital is aggressive. Since the spot demand remains so steady, I expect this momentum to maintain itself over the next few days. This isn't a picture of heavy selling, it's a picture of leverage flush that has run its course. To wrap up the Bitcoin side, for most of last week during the sideways phase, open interest stayed neutral, telling us the market was still digesting. But look at the change now. Even though futures open interest has surged, the spot CVD hasn't shown any sign of decreasing yet. Usually, if a move is fake, you'll see spot traders selling into the rally. We aren't seeing that, because the spot size is refusing to drop. My conclusion is a steady move upward. The massive sell pressure has effectively been taken off the chart. Moving over to Ethereum, it was a similar story but with a more technical squeeze mechanic. During the liquidity grab, we saw a coin margin short squeeze, price rising while open interest was actually falling. It was a forced move, built on shorts covering rather than new conviction. When a squeeze exhausts, the subsequent flush cleaned out the over-leveraged longs on the stablecoin side. It was a total reset. Though, where do we expect Ethereum to go from here? We've entered the stabilization zone, or what I call the post-purge digestion phase. Since the spacity refused to collapse during the dump and funding has finally normalized, Ethereum is perfectly positioned to follow Bitcoin's lead. I'm looking for Ethereum to trend upward and reclaim those pre-flush levels as the big players continue to accumulate. So, Coinella show us that leverage flush is over, and spot buyers are quietly holding the line. But if we want to know exactly who orchestrated that drop and what they are planning next, we need to dig deeper. We have to look beyond just the volume. We need to look at the actual positioning across the major exchanges. Most traders are staring at a 1 minute candle, trying to guess the next move, but while they're looking at price, the real players are looking at positioning. Today, we're looking past the noise with a new layout on MMT, the multi-exchange net positioning dashboard. This tool tells us exactly where the smart money is leaning. Before we dive in, let's define our terms so we're all looking at the same map. Net positioning is the overall balance between longs and shorts. Net long means more traders are betting the price will go up. Net short means they are betting it goes down. A liquidation happens when a trader is forced out of their position. In a liquidation heat map, that's our pain zone map. It shows exactly where the market recently hurt the most people. Look at the data from earlier this month. Before the dump on April 2nd, almost every exchange except Bybit has a clear net short bias. You can see it in these pink lines. But look at what happened after the drop. Those net shorts have decreased a lot, even flipping into negative territory. What does this mean? It means the professional traders who aggressively shorted at the top have not taken profit or covered their positions at the bottom. This is a meaningful rotation. The smart money pressed the downside, got that flush, and then de-risked. Historically, this behavior, especially on Bitfinex, signals a local bottom. The massive selling pressure is effectively gone. So, what's the play? My base case with an 80% probability is a steady grinding up. As long as price holds above 67k and net shorts stay reduced, April looks positive. The bearish counter scenario is only 20% chance. That's if those net shorts aggressively spike again while we break below 67k. Watch the 72.5k mark for resistance and 64.5k mark for support. That gives us our short-term edge. But surviving the week isn't how you make life-changing returns. To understand if we're gearing up for a massive macro run, we need to stop looking at just one chart and start tracking the flow of liquidity. Let's zoom out to the big picture. Now that we've broken down the immediate recap, I want to shift your focus to the real engine room of the market, the crypto market structure. This is how the pros determine if we are in a safe environment or a trap. Think of the entire market as having a fixed, unchangeable amount of water. You've got three bottles to fill: the Bitcoin bottle, the stablecoin bottle, and the altcoin bottle. If you want to fill the Bitcoin bottle more, then the stablecoins and altcoins bottle must have less water. It's a zero-sum game of liquidity. A huge mistake people make is thinking that if Bitcoin dominance goes up, alts are automatically dying. But remember, our bottles, if the water is coming out of the stablecoin, it can actually fill both Bitcoin and altcoin bottles at the same time. This is why we track Bitcoin dominance, USDT dominance, and others dominance together. They are the map of where the money is moving. Alright, let's look at the first bottle, Bitcoin dominance. Since early 2023, we've been in a clear Bitcoin regime. Bitcoin has been sucking up all the liquidity, leaving only tiny windows for things like memes and AI coins to breathe. But look at the weekly time frame here. The whole suit is starting to flatten at the top and roll over. This is a massive signal. We just got a heavy rejection of the 65% resistance zone. Moving forward, if Bitcoin price decides to pick up steam, I would expect Bitcoin dominance to raise again. It could be Tekka in this zone, or here in this zone, but it is how Bitcoin dominance would behave at the start of a strong bull market for crypto, with Bitcoin leading the charge. But at the time, we should monitor closely to see what direction Bitcoin dominance would take after the initial push. Now, if you want to know where the real money is made, you watch USDT dominance. This represents the cash bottle. When this is high, people are sitting on the sidelines in stables. When it drops, they are buying. Right now, USDT dominance has reached a massive monthly resistance zone and seen an immediate rejection. Look at the history. Every time USDT dominance hits this specific ceiling and starts to turn down, it marks the bottom of the crypto market. My base case is that we range here for a few weeks, building a top in fear, but once this bottle starts to tip over and the dominance drop back toward the mid-range, it usually triggers a 1 to 3 month window of aggressive upward movement. That is the water flowing out of safety and back into the game. Finally, let's talk about altcoin bottle, specifically others dominance, which tracks everything outside of the top 10 coins. It's been a graveyard for 2 years. The long-term structure is a clear multi-year downtrend since the 2021 peak. Look at the floor we're standing on. We are currently testing the monthly support zone since 2021. We haven't been this low in a long time. And look at the whole suit. It has flattened out at the bottom and is starting to claw upward. This is the first clear sign in years that the multi-year related weakness of altcoins versus Bitcoin is losing its momentum. This is the coiling spring scenario I've been waiting for. To bring it all together, 1. Stablecoin dominance is at the top, and we are monitoring for signs of breaking down. 2. Bitcoin dominance and others Bitcoin support the thesis that if stables drop, altcoins would outperform Bitcoin. Short term, I think we still have a bit more of ranging and accumulation before the next big leg up. But remember, the more time we spend on accumulation, the more time the upward movement would have when it's time to pump. We're talking about the higher time frames here, weeks, months of green candles. If this hypothesis plays out perfectly, this is about patience, not chasing a 5 minutes weeks. Let me know in the comments if you want me to explain any of this in more detail, or which specific altcoins you want me to run through these filters. In the meantime, stay sharp, trade with edge, and I'll see you in the next one.